Good evening, friends. I think market has been extremely choppy and everyone is concerned what should be the strategy. So I'll try to, based on my limited understanding about the market, will try to explain you what should be your strategy. And of course, as usual, we will open the floor for question and answer. So before I begin my webinar, a small disclaimer that this webinar is just to enhance your understanding about the equity market. Please consult your financial advisor before buying or selling any stock. Equity market are subject to market risk, and past returns is no indicator of future returns. So why markets are down? If you look at in the month of October, it did not start it on a very positive note. While the market is up today, but if you look at what happened in the month of October, it has been extremely choppy. Now there are four main factors I believe are the reason behind that, and of course if you think there are more reasons to that, I'll be more than happy to consider that. The geopolitical situation in the Middle East. Israel has been in an extremely aggressive mode. The fight has gone to Lebanon, and now fear that it could strike at the oil facility at Iran also. Due to that, there is a surge in the crude oil prices. And does crude oil price impacts India? Because the fear is that if the crude oil price goes up, India would get impacted negatively. Two fronts. One is that demand for dollar goes up. Why? Because India has to pay higher import bill because of higher crude oil price. Number one. Number two, it has a tendency to stock the inflation. Number three, FPIs sold very heavily, and because of China announced a stimulus on 24th September, and due to that we saw heavy selling on the FPI. And of course, last but not the least, uncertainty regarding US special election. Of course, I know there is a FNO, SEBI, and so on and so forth. I'm not going to discuss that because it was already known. It's nothing that like kind of an unknown. But nonetheless, that is also the one factor. Let's try to understand one point at a time. Try to understand where are we headed, because beauty lies in detail, isn't it? So let's go to that. Let's try to understand geopolitical situation in the Middle East. And if you look at a geopolitical situation, does anyone has a handle for sure what's going to happen? The answer is no. Everyone is basically making an assumption, and in fact, everyone seems to be looking at the worst case scenario. Okay, Israel will strike the crude oil facility of the Iran. There will be disruption in the Iran oil production, and so on and so forth. And Iran could retaliate in because of Israel attack, and so on and so forth. I think somewhere market is assuming the worst case scenario. Not necessarily that's going to play out. I have no handle. As I told you, there is nothing for surety what is, but unfortunately market is looking at the worst case scenario. 2 years in a row, because of Russia, Ukraine, or Israel, Hamas, market was absolutely fine with the geopolitical situation, but suddenly the market has seems to be more concerned about what's happening. We believe, and my personal belief is that there is excess pessimism due to this event. And due to that, I don't think this excess pessimism is warranted at this point of time. And of course, as and when the situation happens, maybe you should take a call on that. But I think that right now, one should not read too much into that. But that's what the market is doing it. So that's point number one. Point number two, surge in the crude oil prices. Yes, crude oil prices have gone up, no doubt about it. But is this the first time the crude oil prices have gone up, or is this the level which is not sustainable for India? Answer is clearly no. If you look at the data, in the month of April 2024, crude, when I say crude is an Indian basket, okay, $89.44 per barrel. In the month of May, it went down to 83 In the month of June, 82, but again in the month of July, it went to 84. And remember, what data we see in the month of October is 75.83 barrel per barrel. Well, that's higher than what was there in the July and August. So yes, there has been a sudden spike, but why should we be too much worried about it? It has been there in the past. Did market when $90 था तभी कुछ हुआ क्या? We have $700 billion reserves. Are we running into a problem? The answer is clearly no. Then why such a major, reaction to that? So if market has weathered the $90 per barrel also, what is so much worry to? And if as of yesterday, it is Indian. And this is again Indian crude oil basket. The data I've taken from the Ministry of Oil and Gas, 78.84 barrel per barrel. This is the data I'm talking about. So if that is the case, why are we so much worry about it? I'm talking about this data, okay? So 78 is still lower than what was the 84 in July, 82 of June, 83 of May, and April 2024, 89. Then if the market was fine at that point of time, why market should be so much worried about $79 per barrel now? Second thing, China stimulus package. And due to that exodus of FPI investment, so yes, Chinese market did very well. On 23rd September, so we had taken 20 because 24th September the stimulus was announced. It's up by 27%. So if you look at it, 23rd, 24th, 25th, 26th, 27th, 30th September, and suddenly we see 8th October. Is this the mistake here? The answer is no. The Chinese market were closed, for 7 days in a row. Now, normally what we have observed, when any indices basically which sees a substantial jump, it does not sustain at the higher level. And that's a global, if something goes up in a shorter period of time, 27, 28%, my experience tells me that it doesn't sustain for a longer period of time. Okay, so I don't think this is going to get sustained. Number one. Number two, look at the FPI investment. The one belief that market is having that because of China, the FPIs have started selling in India. Maybe true to some extent. But let's look at the data. The stimulus announced on 24th September. FPI invested 2,000 crore. 25th and 26th, there was a selling. But on 27th September, 8,538 crore. And on 30th September, 364 crore. Actual selling started happening in the 1st October till the 8th October. But till such time, the Chinese market were closed. So the one assumption is that Indian market sold and to invest in Chinese market, but the market itself was closed in Chinese. So I don't think there is a strong correlation there between India and the China, inflow in China and outflow. I don't have data on how much amount have been pumped in China as of today. So is this related to the fact of the life is yes, that the FPI did get out of the Indian market. That's a fact. 36,000 crore they sold since the announcement was done by the China. But there is some amount of a time lag there. So I don't know how much we should attribute to that to the China stimulus. Assume that's a reality. They have sold it now. So let's look at the data in a more this one. So what we did in 2024, how did the market behave when the FPI sold? In the month of January, the FPI sold 26,000 crore. You look at this data. The market went down by 0.7, but mid and small cap were close in the green. In March 2024, the FPI bought 35,000 crore. Both mid and small cap were in the red. In April 2024, FPI sold, but both mid and small cap were up by 7 and 9.6. But in October, while they sold 45,000 crore, we saw this 3.2, 3. Everything has been in a red actually, and there is a more selling pressure on the Sensex. I understand and I presume that maybe because of that they would have more exposure to the large cap as compared to mid and small cap, and nonetheless, this has been sold. Now, what we have observed that whenever the FPI basically normally sell heavily, normally they come back very strongly next 2 months or so. It happened in the past. We believe that it will happen in the future also. So look at this data. In the month of October, total 45,000 crore has been sold by the FPI in the month to date. Higher than that amount was seen in June 2022, when FPI sold more than 50,000 crore in 1 month. But what happened? At that time, the Sensex fell by 4.6% and mid and small cap by more than 6%. This time also, if you look at it, the mid and small cap is also down and large cap is also down. But the next month, the Sensex was in the green, mid caps were in the green, small cap were in the green. The historical data suggests that if there has been a heavy selling pressure by the FPI, normally FPI comes back in the next 2 months, number one. Number two, the market also bounced back to this one. Let's go to the last factor, the US presidential election. And there is a belief that, because of uncertainty, who will come, what policy action will come, either Trump or Kamala Harris, the people are little this one. These are all noise, I believe. And why? Look at this data. What we have done, we have looked at the last 5 movement in the US market and the Nifty 50, what happens to the US election. In 2020, all three were in the green, 11, 9 and 11. This is, while these two are the US market, Nifty is an Indian market. Now 2020 was very exceptional year. Why? Because we had just, the whole world just came out from the COVID. We have seen heavy corrections, and opposed that we have seen this happening. If you look at the November 2016, not much change. If you look at November 2012, not much change. Yes, in 2008, we have seen substantial decline. Was this because of US presidential election? Again, the answer is no, something very similar to 2020. Why? Because we had global financial crisis happening that. In 2004, yes, we did see market 8%, 5%, 10% up. So normally, market does not move too much just because of US presidential election. There are other factors that does impact the market sentiment than the US presidential election. So I think, of course, there could be 1 or 2 day event that could happen, a market movement can happen, but I don't expect much of a change in the market because of the US presidential election. Of course, these are data, and data sometimes not necessarily the trend should play out the way it played out in the past. But right now, I don't think that's the reason to be worried at all. So sometimes, when the sentiments are little low, market would tend to basically go little soft. So sometimes the same factors does not matter to the market. And sometimes turn out to be positive. In fact, everyone thought that 50 bips rate cut would help the market to sustain at the higher level or put further leg up. Unfortunately, that has not happened, isn't it? There's nothing called a simple equation. Okay, this happened, so this will happen. I think market is a function of many multi-factors and not one factor that decides the trend of the indices. And that clearly comes out when you look at the data. How did the market perform? Nifty down by 3%, Sensex down by 3.1%, mid and small cap down by more than 3%. In fact, underperform the large cap. Only one index which has closed in the green is Nifty Pharma, which is up by 0.1%. But otherwise, everything is in a red. Okay, so that's what has happened in the market. Then you look at the YTD performance. Not much change. The CPCS index is at top of the table. Auto is up by 41%. Mid and small cap are down, up by near 30%. The Nifty and Sensex. So I think Bank Nifty underperformed, Bank Finance underperformed, Nifty FMCG underperformed. PSU Bank, which was in the top league, I think has seen some amount of profit booking coming in. Now, what I did also, because this market has corrected, I tried to see what has happened to the, in BSE 500, how much companies are off from the 52-week high. So if you look at it, more than 50%, two companies are high. The two companies are down from 50, more than 50% from the 52-week high. Between 40 to 50%, 13 companies. Between 30 to 40%, 55 companies, and so on and so forth. If you look, 36% of the companies are down by more than 20% of the 52-week high. In other words, there has been a selling, but it's not that kind of a selling that we have seen, that many companies are off from the 52 week more than 20. Of course, one third is definitely more than 20%. Now, someone would say more than 20% is a correction. Agreed that. And 0 to 10%, 140, and 10 to 20%, 196 are the substantial portion. So, is there a kind of a panic selling? As of now, doesn't look like, according to me. Of course, we will wait and watch what data comes in and how the market behaves. But there is nothing kind of a worry as such in this one. Of course, overall advance decline ratio has gone in the favor of advance declines. But is this a cause of concern? The answer is no. There is a global sell down despite the rate cut. Both US and the Europe markets are down. Indian market seems to have down more than the other markets, other parts of the world seems to have happened. Election result, and one of the reason why market today has shown a lot of strength today, purely because of this, second time in a row, we have seen exit polls going haywire. We have seen during general elections also suggesting that BJP will form a strong majority, and of course, really strong, majority that did not happen. And now everyone was thinking that, Congress will form the government. As per the exit poll, it looks like that BJP is going to form the government. Why? Because total 90 seats, and as of 6 p.m. from the as per the Election Commission of India, BJP was leading in the 48, leading plus win in the 48. So I think very comfortably BJP should be able to form the government, and I think that's again gives a comfort level to the market. The policy action will continue. And that's where had this election result gone against BJP, I think market would have become a little jittery, number one. Number two, the Maharashtra election is going to get announced very soon. And I think this outcome of Haryana election has given some comfort level to the investors. But remember, market has no like or dislike for any political party. I must tell you that also. So but right now, I think the BJP retaining third time in a row in Haryana has given a lot of comfort level to the market. So what should be your strategy now? Because that's where the matters, am I right? Market is likely to remain volatile because of the global factors. No one has a handle on, and every day as the news flow comes in from the Middle East, market could remain volatile. My sense is that use these dips in the market to add more money to the equity. Why I'm saying so? There is no change in the India's structural story due to these events. Crude oil, we have seen much higher prices and yet market did well. We have seen FPI selling in the month of January and still market was fine. So why are we so much worried about this actually, these events? See, remember the huge amount of money sitting on the sideline for the market to correct. For some reason, if any corrections happen, that's going to be temporary. Why? Because that money is going to come back, which is sitting on the sideline. If you remember, I said in the month of September, almost 2 lakh crore is waiting on the sideline by only Indian mutual fund industry to come into the market. At the same time, retail investors are also waiting for the corrections to happen. In case if that happens, I think all that money is going to come in. Plus, almost 30,000 crore new money is coming into the mutual fund every month. So the liquidity is so strong that I don't think this, if any correction that's going to be there, is almost likely to be the temporary. There are news that Government of India may allow higher allocation of from the EPFO. Of course, that goes to the passive fund, doesn't come to the direct. But that improves the liquidity. So that's going to happen most probably in case if the market do come down I think government will announce certain measures to boost the sentiment, and one of the factors could be the higher allocation by the from the EPF by higher allocation to equity for the EPFO. But having said that, we firmly believe there will be a sector rotation happening. Leaders of yesterday may not be the leader of the tomorrow, and hence our sense is that be careful of what you, because recency bias is one factor that hurts the most, because we believe that what worked in the past is likely to work in the future, not necessarily. And hence my advice to all of you would be, while we don't expect major correction, but there could be time correction, your stock selection is of the paramount importance. Otherwise, market may bounce back, but you may get stuck with the companies which were the leaders and do not participate in the next leg of rally. So your due diligence right now needs higher amount of attention. Please look at the fundamental of the company, look at the story behind that company, and then go for the stock. If you don't understand much, Markets Mojo has a score on each and every company. Please use that as a guiding star for you to help you do that. Having said that, nothing to fear in this market. Jot down my word, there is nothing to fear in this market. Be disciplined, stick to good quality companies, don't chase momentum, which I have been saying for quite some time, and you should be fine. Assume that market corrects and remains so. How does it matter to all of us? We are not here for 1 month, 2 months, or 3 months. If there is no change in the structural story, and Ms. Nirmala Sitharaman the other day made a statement that in next 5 years, the per capita income of India will go up by $2,000. $2,000 in next 5 years. So story is intact. Of course, market will closely watch the commentary from the India Inc. We discussed in the equity outlook that GST collection was little subdued. The commentary coming in from the FMCG companies and consumer facing companies not so robust. So I think market will closely watch the commentary. If you remember the first quarter numbers when they came, everyone said that they do expect revival in the second half. No one was expecting revival in the first half. So do they maintain the same kind of a trend once they declare their September numbers? And if that is so, I think market will take a lot of comfort from that. So in nutshell, yes, do expect market to remain volatile. Do expect time corrections. Any corrections in the market which is substantial will be temporary. Use dip in the market to add more to the equity. With this, let's open the floor for question answer. Can we? Suraj, hello. So glad to see you. Your comment is always reassuring. Last time you came and told us about growth in small caps, and next 2 weeks we saw the index correction for almost 15%. Thank you for your insight information. Further looking at the current market, should we start building cash position? No, Suraj sir. I said that don't do that. Please remain invested. The only thing, be careful of what you get into. That's the only thing. So don't be victims of recency bias. PK said, would you term this correction as a healthy? The market was overinflated. अभी भी liquidity जो है. Will the government partner Adani is facing tough time in Lanka and Bangla? Do you think government should help? Business model should separate. Your views. So let me not go into the political side, because there are views and counter views, and then people do get agitated. So would you term this correction as healthy? Of course, yes, and you would have seen in my presentation also. अभी liquidity है. I think you are right, absolutely. Liquidity is there. And remember, all government across the world do help the local companies in the export market. So if Indian government helps Indian companies in the foreign land, I don't think that should be a problem, isn't it? But anyway, your question is, should the government help? I'm not saying only for Adani, for any Indian businesses. Why should not? The answer is why not? I'm not restricting my reply only to Adani. Why not? That's the job of a government. to support the local companies in the foreign land. If government will not support, who will support them? So answer is yes. Raju is saying, sir, what will be the impact of Israel and conflict on Indian market? Sir, I mentioned that we don't expect much. See, there are uncertainty. If the situation do flare up, yes, it can flare up. There is no handle on that. Am I right? Maybe for 7 days, maybe for 10 days, but I don't think much of a. Of course, it's a developing event, so we now wanted to wait and watch. There could be knee-jerk reaction that could happen to the market, but India, there is nothing changed in the India structural story. So I don't think one has to be really worried about it. And FPI, investing in US in the Chinese market at the cost of Indian market, well, if the index goes up 26-27%, FPI will also look at this. Should we really now get into this market, and should we put in more money taking out from the Indian market or not? So I think no much impact. I mean, there could be time correction, there could be price correction, more of a price correction, time correction than the price correction. But is it a dire situation? Answer is no. Frank is saying, hello Sunil, why the great gold rally is in danger of petering out? China stock market recently has roadblock on lack of new stimulus measure. The bull market is really its second birthday. His White will like to continue. Why escalating bullish tension haven't stopped the stock market from climbing? I don't know whether gold market really is danger of petering out because of China. I don't think so. That's going to happen. But your question is that here is why it will likely continue. I think there is no change in the India's fundamental story. There is no change in the structural story. Liquidity is strong and is likely to remain strong. More money can come to the EPFO in case government allows, and which most probably that will. I don't think that's a much of a concern. So, in Middle East scenario, no one has a clear-cut handle what's going to happen. For 2 years, we have been looking at geopolitical situation, and market chose to ignore. Who knows? It's just a temporary setback for the market. Market can start climbing up again, or maybe there is a kind of a time corrections, but nothing major to worry about it. To be very honest with you. Harsat Kale, twice before you had agreed to have a special event on different financial restaurant that uses to facilitate stock shorting, but you back office has not taken any cognizance so far. Please look at it. Yes, sir. Thanks for reminding Kale, sir. We will do it. It's just that none of our team members are getting a lot of time, but just remind me. I will for this again. We'll ask someone on our team if they can do that. It will be really this. So sorry we could not do it, but we'll try to do it, sir. Amit Joshi sir is saying, thanks a lot, sir. Mojo stocks are a wonderful tool to create wealth. I have generated very good alpha since Feb 2 after becoming member. Thanks, sir. God bless you. God bless you too, sir. Thanks a lot. And I think that's what I was saying in my presentation also. Ki, if you are a little confused, let Markets Mojo be the guiding star for you to select which company to go in for and how much you should allocate. We have a model portfolio also. If you want, you can use that also as a platform to generate wealth. Monko, happy Navratri to you too, sir. Does the market going down have anything to do with the mega IPO of Hyundai? People are selling stock to invest in it. I don't think so, sir. We have seen the kind of money going into the IPO market in Ola and so on and so forth. I don't think Hyundai is a concern at all. I don't think so. To the best of my limited understanding, I don't think Hyundai IPO is a reason why people are selling to invest in that stock. Remember, it's not a very unique proposition for the investors. We already have listed entity from that segment already available for the investors. And due to that overall selling, I doubt. You could have said that, because Hyundai is coming on IPO, are people locking in some profits in Maruti? Are people locking in profits in Mahindra? Are people locking in profits in Tata Motors? Maybe I would have agreed. But because of IPO of Hyundai, people are selling across the board. Looks little stretch. Sam Sundar say, as per the FPI data said by you, are you implying that the FPIs are no longer impacting India's movement significantly? So it must be due to retail and DIIs. So I'm not saying FPI does not matter to the Indian equity market. I didn't. That's would be a little unfair statement. What I'm saying is that FPI does have an impact, but very limited impact than what it used to be there in the past. Why? Because now we have a strong inflow of domestic investors, which is really helping to counterbalance the FPI. Because previously, what used to happen when FPI used to sell very heavily, Indian market would definitely have a major corrections happening. But because there were no retail investors who could counter that sell now, but now it doesn't actually doesn't look like that. FPI can make so much impact. In fact, if you look at the data which I presented in 2024, also, many times the FPI sold very heavily. Again, can we see this slide if you don't mind? Amin, am I visible? In May, basically, they sold 25,000 crore in 1 month. The index was just down by 0.7. Mid cap was up and small cap was marginally down. So, because FPI sold very well, and you look at January, 26,000 crore sold by them. Sensex was marginally down and mid and small cap were up by more than 5%. So, in a way, I think we have a strong inflow coming in from the domestic institutional investors, and that's really helping to counterbalance that. And second, one more thing, Shyam Sundarji, I am making a statement that whenever FPI sold very heavily, they normally come back very strongly in next 2 months. Sagar, Namaskar, Guruji, Namaskar, Sarji. How do you feel market going forward as bulls, retailers and bears, FI, both are in the fifth gear and daily movements on either side happening in the market with good 2023 and 2000, do you feel we see muted 2000 or with the good liquidity with retailers, market may move further up only and China, FI only temporary in FI may come back later in Indian market? What is your take on this? So Sagar sir, definitely we believe that what happened to the FPI selling is not going to get sustained. We don't see this quantum of sell happening even going forward from the FPI. And the history suggests that whenever FPI sold, they bounce back very strongly in the next 2 months or so. So, and will the market will be muted in 2025? Sir, I'll come in front of you either last week of December or the first week of January with my equity outlook for 2025. Sir, just hold your horses. I will try to answer at that point of time. In the last webinar, I have given feedback on the addition of Nifty Macrocap 250 to the screener section as it is added. Your question, has it been added or not? Sir, I don't know Nifty Macrocap 250. So I only want to focus on Nifty Macrocap index stock for my investment decision. It has been seen that small cap has a huge opportunity and beats a large cap in the long run. So according to you, for the long term, is it right way to focus only on index or any suggestion? So Rohan sir, see our understand. See, micro cap do run a risk of a heavy volatility, not enough liquidity available, and if you happen to buy a wrong company within the micro cap, and if for some reason that company has to correct very significantly, you can burn your fingers very badly. Am I right? So yes, your observation is right. That normally small cap does better than large cap, mid cap does better than large cap. But it's all function of which company you are holding at. If you don't know which company you need to hold, then maybe you can look at Microcap 250 index as a basket where some ETFs would be available, and you can do that. The moment you go into stock selection, I think you do run a risk of a stock selection and stock allocation. Both could be little counterproductive. So if at all you wish to go with Microcap 250, don't allocate too much fund. Number one, why? Because by nature it is volatile, and play with the microcap with the index rather than the stock specific. Vinith is saying, please say your ways on metal sector given the depends on China, so only one metal company are in the top stock list. So normally what we have observed that normally metal does well when the China does well. Now we don't know whether China the measures that has been announced by the China are good enough to lift the economy. Right now, market believes that it's going to lift the economy. I think we need more data points to confirm that. Till such time, we believe that metal can remain in a volatile zone, in the sense, based on what happens with China, it can move. So should you buy metal companies? Maybe stock specific. As you rightly said, only one metal company is then a top stock list. Maybe you can look at that to right now. As and when the situation improves, if more companies comes on the buying list, then you can go ahead and buy. Right now, only one company. DK sir is saying, what is your expectation from RBI's policy? When do you expect rate cuts and how will that affect markets? So, general consensus seems to be no rate cut. My personal opinion that there should be rate cut of 25 bips. We'll come to know in next couple of days. The reason is very simple, because this country needs some amount of a lower rate of interest to revive the capex cycle, to revive the consumption cycle. I'm hopeful that, and with good monsoon coming in, inflation is no longer a factor. Am I right? So my sense is that 25 cuts should come, and that should really boost the sentiment. But remember, no one single factor can impact markets and significantly. We have seen that happening with the Fed announcing 50 bips rate cut, and yet market moved down. Why? Because other factors coming in and spooking the market sentiment. The same way, just focusing on rate cuts and to take a decision may not be a very appropriate one. Raj is saying, how important is to assess business model of companies, as we should look at the invest. Just market feature to this assessment. If not, can this be looked into? So, Raj sir, we don't take into consideration any future projections when we look at. We have devised our IP in such a manner that try to, based on the historical data, try to understand what could be the future potential of that company. And that's how our IP has been done that. Your question is that how one should assess business model? Very simple. See, ultimately business is a function of demand and supply. And there are many businesses which are also a function of not only local demand and supply, but the global demand and supply. For example, metal. On the other end, the cement is more of a local play. You can't basically forget about export and import from other countries. You can't basically move cement from Rajasthan to Tamil Nadu. Within the country also, cement, it's more of a local market. Why? Because of a huge transportation cost. So, business model is a function of demand and supply. If the supply is more than the demand, we know what happens. It's very simple. Of course, it's not that simple again, because there are other globally also. You need to understand what's happening globally also. If that company has a global products with him, okay. So my sense is that business model is it's more. You need to spend some time to understand what strategy management is planning to play out. Go through the annual report, go through the con call of the company, and so on and so forth, to understand the business model. That's what you should be doing. Markets Mojo IP does not read annual report, does not read con call, but it does take some data from it. It takes data from the quarterly numbers and the annual numbers to understand what could be the future of this company in terms of the price movement. I hope that answers, Raj, your query. For some reason, if I am not able to answer that, please repost it and I'll try to make one more attempt. Neerav Salvi sir, which sector one should look forward in 2020? सर आप लोग को 2025 की बहुत जल्दी लगती है. नीरव जी, I will come in front of you people and tell you which sectors looks promising. As of now, as I told you, I'll come in the last week of December or the first week of January to tell you which sectors should do well. Sundarajan sir saying, do you foresee results of IT companies which will start declaring the second quarter numbers from this week onwards would be far better than the previous quarter, as well as the better of year-on-year basis? Again, my sense is that they should do better. Why? But the US economy is really done reasonably well. And I was talking to someone, I think in Hyderabad or Chennai. I was traveling and I happened to meet one of the person from the IT industry, And he was saying that attrition rate has started going up. Why attrition started going up? Not because companies are asking people to leave, but the employees are getting a better job with a better package. That means seems to be some improvement demand. So my sense is that the second number should be better than what was market is anticipating. And if that happens, I think, and if the commentary is good, the sector can be an outperformer. Vinith KRSL, twice before you had regulate to have special event on different financial instruments, but you back office. Why are you taking again this question? We have discussed that, no? We will do it. Amir, you need a chai or coffee?
No, sir, there are many questions.
Achha, in PMS, reason not showing to sell company each member portfolio wise. Why? Rupesh sir, we don't say rationale for why we got out of that company uh, uh, because it's run on an IP and the PMS IP we don't disclose to anyone. So the reason why we got out of the company is completely driven by the IP. And we can't discuss much about the IP. That's why we don't show that, sir. See, Rupesh sir, not all necessarily company that we sell that company is purely because of our view on the company's change. It could also because we want to lock in the profits in the PMS. And that's the reason why we may exit from that company, despite the score may be good. Vishal, based on your analysis after the budget, the sectors mentioned in that webinar, FMCG, tourism, infra, will still hold true or there is some change as per the recent events analysis? My sense is that Vishal sir, there is no change. I think this sector looks extremely good, FMCG, tourism and infra, and there is no reason for me to right now change my view on any of these three sectors. Thanks a lot, Rao sir, for your compliment. Yes, it's my job, it's my duty that I should guide you. I'm not doing any favor to any of one of you. I'm just performing my duty. Ajay is saying Swiggy is bringing out the IPO soon. Zomato, direct competitor, will it affect the future? See, normally what happens, Zomato today is a very unique proposition, kind of a stuff. Novelty business, no other company available for you to take exposure, and normally it commands a premium. As in when there's a competitor comes in with a listing, it does impact the price of the incumbent players. So that's what happened. Will it happen in Swiggy or not, or will it happen with Zomato or not? It's very difficult to say. But normally that what we have observed, a new incumbent coming in does impact. I'll give you a classical example. I am talking about the TCS IPO coming in. And at that time, the Infosys was the darling of the investors. When TCS came out with an IPO, it did impact the Infosys in terms of the kind of multiple it used to command. There is a high probability Zomato may also see similar kind of a impact. AC sir is saying future outlook of Bank of India stock. Sir, we have a score on the Markets MTD website. Why don't you basically look at this our score of the company and take a call on that, sir? I don't give a stock specific advice. R. Padma is saying, I have invested X amount over 2 years, which has become 2X in 2 years in my model portfolio. I want to invest in another X amount. Shall I open another model portfolio or add to the current one? See, if you want to have a moderate portfolio only, then it makes sense to invest in the existing portfolio only. Why do you want to basically create a new model portfolio? But now you say, no, I want to create a conservative portfolio, or I want to start an aggressive portfolio, then definitely you need to start a new model portfolio. But if your profile remains the same, moderate, there is no reason why you should basically create a new model portfolio. Why I'm saying so? Because your number of companies will further expand. What's the point in that if your risk profile is the same? So my advice would be, please, if you want moderate, please continue with the same if you want to be conservative or aggressive, start new model portfolio. And I'm happy that your portfolio has gone up by 2x in 2 years. Muthu Subramaniam said, I invested significant amount in a penny stock and then realized that I have made a mistake. Now the stock has become illiquid and I'm not able to sell it. Please help me. How do I come out of the stock? Muthu sir, since you have learned your lessons in a hard manner, I hope you will not repeat that in future. And what my advice to all of you is that please learn from the mistake Muthu sir has made. The only choice, sir, or what is that only advice I can give you, Muthu sir, that don't try to sell everything at one go. Since they become illiquid, so maybe try to sell 5 stocks, 10 stocks daily to keep getting out of that. That's the best way you can do. Nothing else you can do that. The moment you try to sell bigger quantity at one go, I think you will run into a problem. Either you will not be able to sell or you will be able to sell but at the higher impact cost. So my advice would be, if you have 100 shares, start selling 5 shares a day or side of a stock and slowly and steadily start. If you are able to sell 5 shares in a day and if you still there is a buyer available, sell 5 more stocks, that way. So don't give 100% of your holding as a sell advice, sell order. Keep dicing it depending on the market sentiment and try to sell this more on the good days. Because on a good day, what I've said that, some of the micro cap also has a good volume. So you may be able to exit good portion of that in the good day. Like today is a good day, it was a good day. And had you look at it, some of the mid and micro cap also, small and micro cap also had a good volume on that. Try to sell on a good days. Who knows? You may be able to get out 100% on a good day. Viswanath Jayasunil, I'm one of your big fan and usually don't miss any of your webinars. Your in-depth analyzing of the current situation and advising your customers is highly recommendable. Thanks a lot. Thanks a lot, sir, for your compliment. My query is that since the amount buying by DI is increasing substantially with every decline, is it the beginning of the fact that Indian economy is going to be a benchmark for other country indices to invest or divest? I mean, India has become a global leader in the equity market also regards. So, Viswanath, sir, it's all function of chasing growth. As an investor, you prefer to invest in a company which is showing growth. You don't prefer to invest in a country which is not showing growth. What applies to companies also apply to the country. In many places, we have seen that India's weightage in this global indices has gone up purely because the Indian market has done well. But having said that, we have still a long runway, in terms of replacing other giants like Japan or US. We have a long runway to do that. But yes, the trend is moving upward, and that's a good news. Today I see many people asking too long a question. Santosh, with so much uncertainty, how do you suggest investors plan way forward? Secondly, the top mojo stocks good from long-term perspective? So Santosh sir, you have 2 questions. How do you suggest investors plan way forward? Very simple. Use every dip in the market to add more to the equity, provided that funds you don't need for next 3 to 5 years. That's number 1. Number 2, don't be the victims of recency bias. In the sense, the sector that did well, don't assume that they are going to perform well going forward. There could be a possible sector rotation. And hence, try to see the sectors which has been laggard, but the quality of those companies are good or the comment is extremely good. Try to do that. I think that's the best way you can do that. And number 3, your second question is, mojo stock good from the long-term perspective? So, sir, we don't have any view on the company in terms of time duration. As we say that if the new data comes in, which says that the company is not likely to outperform, we advise exit. So my advice would be as follows, Santoshji. Please invest in mojo stocks. Continue to hold that mojo stock till the score goes to 60 or below. With condition, if the script is moving up, the price is moving up, despite if the score is 60, don't get out. But if the price is also falling and score is also falling, please get out of that mojo stock. So in other words, don't marry any of the mojo stocks, because we'll keep having new mojo stocks. So what you should do, for some reason, if you exited from one mojo stock, get into another mojo stock and keep allocating that way. But they are no longer, they need not be a long-term buy and hold kind of a strategy. We don't believe in buy and hold strategy at Markets Mojo. Harsat Kale sir saying, have you started preparing for Diwali portfolio for 2024-25? Sir, please know that I don't make any Diwali portfolio. It is Mohit who does that, and I'm very sure that Mohit will be in front of you during Diwali time with the Diwali portfolio. That's my assumption. I have not spoken to Mohit, so I have no idea. But I believe that Mohit should do that. So last year also Mohit presented in Diwali portfolio and did extremely well. Most probably he will do this time also. But my request would be, please ask this question to Mohit when he comes for the webinar. Karthik is saying, what should we do with the Diwali portfolio last year? I think we keep sending you advice on what needs to be done with the Diwali portfolio in terms of which script to get in and which script to get out. Please follow that advice in a very disciplined way. I think it has done extremely well our last year Diwali portfolio. So please continue following that. I do believe that you do get an update on Diwali portfolio through our Monday webinar. And do we send email also now, Amil, on Diwali? Huh? Yes, sorry?
Don't know, sir.
You don't know. Achha, he doesn't know. But I think we are also, in case it is not happening, I think we'll also start sending you updates on Diwali portfolio through email also. But otherwise, every Monday, our team members comes and tells you how you should reshuffle the Diwali portfolio. So right now, my advice would be please continue with your Diwali portfolio of last year. It's done extremely good job and probably is very high that it should further continue to do well. Can I merge if I have multiple model portfolio of the same profile? See, Mohanji, if you ask me very frankly, it does make sense. Why do you want to have it for same profile, multiple portfolio? Because that will increase number of companies. And we keep saying that, more the number of companies, lower the probability of outperformance. So, if I would be in your place, I would have done it. Sam Sundar, is the party over defense PSU data so that lots that had PE expansion not backed by the growth in earnings or PE expansion was too high. So we did mention Sam Sundar sir. I don't know whether you are attended that webinar or not. We did say that whether it was defense, whether it was railway, some of the PSU banks, we did advise that be careful with what you get into. You need to be little more stock specific. I'm not saying every company within the defense or railway or PSU banks is going to underperform, but I think your stock selection has to be paramount importance. It's not going to see that we are going to see a what we call thematic rally in this kind of a sector. And I said that Sam Sundarji time and again, the leaders of the past rally are not be the leaders of tomorrow rally. So having said that, be careful in what you get into. I would prefer to have the sector that has not taken part. Who knows? The multi-bagger could come from those sectors. Amit inform me that there are no more questions. Is that understanding right?
Yes, sir.
Okay, there are no more questions, and at the same time, we are coming closer to 8 also. So with this, thanks a lot everyone taking time out. We remain patient, calm. Market will remain little volatile. Nothing to worry. There is no change in the India structural story. We should all do well in a medium to long term. Good night. Take care.